I'm John Moog, Portfolio Manager of the Pengana Global Small Companies Fund. Our team's been investing in the small cap universe for the last 15 years, constructing high quality conviction portfolios in the small company space. Today I want to tell you a little bit about what we're seeing in the world and talk to you a little bit about how we're implementing that in our investment approach. My investment philosophy is that of a value investor. However, in the small cap space, we believe the best way to protect capital and compound value as a value investor is to invest in very high quality businesses. In small caps, you typically have mono or dual line businesses that do one or two things really well. So our focus is to find businesses that do something extremely well, create a significant amount of customer value, and combine that over a long period of time to create a significant shareholder value. Our focus in terms of finding companies to invest in the small cap space is not to be everywhere all the time. We meet with 400 to 500 businesses a year to identify hopefully 30 to 40 very high quality businesses that meet our quality criteria. We track these 30 to 40 businesses over time and have compiled a list of over 400 to choose from over the last decade. Our view is really there's no substitute for getting out, meeting with companies and meeting with management teams in terms of identifying truly great companies moving forward that meet the quality characteristics we're seeking. Currently, we're overweight Western Europe. Our view on this is fairly simple. Western Europe offers us an ability to buy very high quality businesses at a meaningful discount to the rest of the world. That's because some of the concerns that Europe's had over the last 12 months. However, Europe's returned to growth, equities are very cheap, and we're finding some very high quality businesses that generate significant free cash flow yield at high returns with meaningful growth moving forward that we think will allow us to compound very meaningfully moving forward. We think Europe actually moved through the period of late 2022 quite a bit better than many expected. Europe's now returning to a level of growth, which I think will surprise many on the upside in 2023, as they're able to use relatively cheap labor cost advantage given an expensive US dollar to help fuel growth as natural gas prices have come down. Our expectation for Europe is to have modest growth moving forward, which will allow investors a lot of comfort given where equities are currently trading. We look at risk in two ways. The first, we look at risk across the portfolio, top down. We make sure the portfolio doesn't have too much risk in any one area in terms of geography, sector, or currency. So we actively manage the level of diversity across those three metrics across the portfolio. Secondly, on a company-specific level, the things we are most concerned about are balance sheet strength and corporate governance to really protect us as minority shareholders. As we move into emerging markets, one of the risks we spend a lot of time thinking about are, again, those governance concerns. And as you move into emerging markets, those governance concerns are quite a bit higher in certain places of the world than they are in Anglo-Saxon jurisdictions. We often control this risk through smaller position sizes and deeper levels of diligence into a company's background and management team's history. We recently invested in a business in the US called TriNet. TriNet is a PEO business in the US, which effectively means it aggregates employees from a bunch of small, medium-sized enterprises and allows them to scale their purchase of health insurance as well as handles payroll and other HR functionalities for small businesses. This exists in the US because many US citizens get their healthcare insurance through their employer. Why we invested in TriNet and how we led to it is, frankly, we are a PEO customer ourselves at Lizard. We utilize this service. We know it's a very sticky service, and it's very important to employers given the healthcare insurance aspect, as well as retirement plans and other payroll benefits. So from our perspective, it's a very sticky, very important part of many small, medium-sized businesses over time. Secondly, these businesses have very strong cash flow generation capabilities. They take no risk in their service offering, and we think are well positioned to grow in the U.S. economy over a long period of time. So from our perspective, it's an excellent business with a lot of growth, and we were able to acquire it at low double-digit cash earnings multiple moving forward. We'd expect the business to continue to grow and generate cash for investors moving forward. We stay up to date with the trends and other news items in international markets through a variety of significant time reading, spending a lot of time discussing things as a team, reading as a team. And most importantly, we talked about 400 to 500 management teams a year from around the world in a variety of different industries. This gives us a pretty unique perspective on what is happening in different industries around the world, what the drivers are, both top line and on a cost basis of a lot of different industries around the world, giving us an ability to put all that information and aggregate it all together to form a view of what's happening in different places around the world at any one time. Currently, in the small cap market, I think the opportunity is fairly large. Small caps are trading at a discount to large caps, have been out of favor for the last 24 months, and I think this is the most obvious opportunity. Small caps can be somewhat cyclical as an investment, and currently, small caps are set up to perform quite well. That being said, I think one of the biggest challenges, as always in the small cap space, is individual equity selection. We're faced with a massive universe from which to choose from, and it's easy to make mistakes in our space, either from a governance or quality of business standpoint. So for us, the focus is always to find those high quality businesses that will continue to compound through good and bad times, to utilize their strong balance sheets, and to allow us to sleep at night. And we think that is always the challenge and the opportunity in the universe we operate in.